Hello. Asian markets, they have started mixed this week on a positive note as investors await a slew of economic data from China. US futures also hold steady after a positive close on Friday. The GIFT Nifty is indicating a positive start for the Indian market. Crude prices hold steady as investors await a key meeting between US President Donald Trump and Russian President Vladimir Putin. Meanwhile, gold prices pull back after record highs on the back of a firmer dollar. In one of the largest ever FDI in Indian financial service sector, UAE-based Emirates NBD banks is set to acquire controlling stake of 60% in RBL Bank through primary capital infusion of 26,850 crore rupees. NBD will also make a mandatory open offer to acquire further 26% stake. The bank also reported a mixed set of Q2 FY26 earnings. Reliance Industries delivers a robust second quarter performance aided by strong growth in its consumer business. Consolidated revenue rises 10%, net profits jump 10% from a year ago. Margins expand 110 basis points to 18%. A heavy weekend of bank earnings. HDFC Bank reports in-line set of numbers led by trading gains. ICICI Bank and Federal Bank also report good quarter, while IndusInd Bank reports a weak Q2 FY26. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. Firstly, a very happy Diwali to all our viewers. Hope it is a one that creates more wealth for you all. Safe in terms of health as well. So thank you so much as always for joining us and happy Diwali to all of y'all. Let's look at what the Asian markets are doing this morning, and seems like a bit of a green start is what we are watching out for. The Hang Seng as well as the Taiwan index managing to hold on to very strong gains in today's trading session. Even Shanghai is holding on to 0.6% of gains. We have the ASX 200 that's a bit muted, so keep an eye out on that. Like you can see at the bottom of your screens, you have the indication coming in from our ticker team. GIFT Nifty is indicating a gap up start for the Indian markets. And do not forget that we've seen third straight week for the Indian markets managing to close in the green. This momentum seems like it's going to be continuing today as well. As of now, 0.8% of uptick is what the Nifty implied open is indicating. So that's something as a positive start that we're watching out for from the Indian markets as well. But we had a lot of overnight cues that came in, important earnings that came in over the weekends as well. So let's start with what is the cues in terms of the market that we're watching out for. We'll set you up for trade, stocks, as well as what's happening in the world of F&O. We have a team of research with us this morning. First up, let's go across to Vivek, who's joining us to tell us that important market cues that we should be keeping an eye out on. Good morning, Vivek, and happy Diwali to you as well.
Good morning, Vinny. Happy Diwali to you and all of our viewers. Well, we are starting this particular week on what is essentially a very strong note. It's a truncated week. Remember, we have 2 days where markets will be shut as well. Now, talking about the cues, overnight cues, US indices, all of the US indices on the back of positive commentary ended higher by 0.5%. And oil prices, despite the fact that they rose marginally on Friday, last week they ended with cuts of almost 2%. Brent now hovering near the $61.5 a barrel mark. Like you mentioned, Indian markets, last week ended the week with third straight week of gains, and the Nifty Bank, remember, that will remain in focus today. That continues to hover around record high levels. So what are the key cues to watch out for in today's trading session? Friday post-market hours, Reliance delivered a very strong set of results. So, watch out for that particular name. Ultratech, slightly muted set, but the company has gone ahead and given a very strong capex guidance for the coming few years. Along with that, the entire Nifty Bank will be in focus. So many results: HDFC Bank, ICICI Bank, IndusInd, PNB, Yes Bank, RBL, as well as Federal, remember, will be in focus on the back of fundraising announcements as well. And along with that, quite a few other results from other sectors as well. So JSW Energy, CSC, Dixon, all of these stocks, remember, are in the F&O and expected to react to results. Like you mentioned at the start of the show, Asian markets, GIFT Nifty, all indicating a gap-up start for our markets this Diwali morning.
Absolutely, Vivek. Thank you so much for that. But let's go across to Sudarshan, who's going to tell us what's happening in the world of F&O. What should we be keeping an eye out on? Sudarshan, 25,700 is here now. What are the levels that we're keeping an eye out on?
Good morning, Vinny. It's a Diwali cheer across the board after a happy Friday. Now there is no Monday blues. Whatever cues that you can talk about, All the cues are indicating a positive start and the move for Nifty towards 26,000 almost after a year and a half. FI short covering has continued, and today, after a heavy weekend earnings that we have seen from all the major banking heavyweights, HDFC Bank, ICICI Bank, IndusInd Bank, and majority of them have reported earnings either they were in line or slightly better than estimates. And now also the cues that we are getting from global markets are looking largely positive, and on the back of that, we are seeing a big move coming in the GIFT Nifty. That's indicating a start with a gain of more than 200 points for Nifty. If we manage to do that and move towards 26,000, then next target comes around the record high of around 26,178. Now coming to the FI flows, both in the cash market as well as in the derivative markets, they have been forced to buy at the higher levels, and we have continued seeing that DIs continue to have been buying, and now FIs also have turned buyers. On the Friday in the cash market, they bought more than rupees 300 crore. DIs continue to buy. They have bought more than rupees 1,500 crore. In the index futures too, FIs have bought almost rupees 4,000 crore. And the important part is now FI long exposure has increased to 17% from the 14% level that we had seen on Friday. And on Friday, they have reduced short positions of more than 16,000 contracts. And not only they have done that, they have also added long positions of more than 4,000 contracts. And interesting data from the options market, the major activities that we have been seeing that have happened above 25,700 on Nifty. So on the call side, the most active one was 26,000, where we have seen addition of open interest of almost 55 lakh shares, and next active one was 25,900. On the put side, 25,700 and 25,800 were very active ones. So support would be Friday's intraday low, that was 25,500. It's very unlikely that we'll go to that level. So support would be around 25,600 to 25,650. First resistance would be 25,900. And if we manage to beat that comfortably, next resistance comes around 26,135. As far as Nifty Bank is concerned, it's been hitting the record highs continuously. So support 57,200 and resistance would be 58,000. One stock that remains in the band is the Saman Capital, and RBL Bank has entered just ahead of the deal with Emirates NBD on Friday. It has entered into the band. Two stocks that I'll keep an eye on: Asian Paints, that crude has moved lower and has been seeing short covering. So keep an eye on that stock. And another stock from the pharma pack, we have been seeing buying across the pharma names. But one stock that I'll keep an eye on is Sun Pharma.
Okay, Sudarshan, thank you so much for that, and happy Diwali to you. Markets are surely, like you said, Diwali cheer is what we're expecting. So thanks for that roundup coming in the world of FNO, Sud. But let's move on. And RBL Bank, that's the one Sud highlighted in the world of FNO. So let's keep an eye on that. Why Emirates NBD will acquire 60% stake in RBL Bank. For more details, let's go across to Gaurav. Gaurav, good morning and happy Diwali.
Well, yes. When we talk about RBL Bank, there are two news flows. First is that when we look at the second quarter's earning, it was a mixed bag. When we look at profit, that declined almost by 20% on a year-on-year basis because provisions were high. But apart from that, there is one thing which will keep the stock in buzz, is the Emirates NBD deal. Remember, Emirates NBD is going to invest 26,853 crores in the bank for 60% stake, and they will be buying this at a cost of 280 rupees per share. Now, board has approved already to issue and allot 96 crore shares for that. And remember, this will be the largest ever foreign direct investment made in the Indian financial services, and it is also the first of its acquisition of majority interest in a profitable Indian bank by foreign bank. When we look at Emirates NBD deal, it will also trigger a mandatory open offer. The mandatory open offer will be for 26% stake, and this open offer will also be at a cost of 280 rupees per share. Now, with this, board of directors of Emirates NBD and RBL both have approved to amalgamate the branches of Emirates NBD and RBL together. Post completion, we will see Emirates NBD to be designated as a promoter of the bank, and at the same time, they will also have rights to nominate director on the board. What benefits they are expecting? Let's highlight a few. First is that this infusion will result into 3 times increase in net worth from around 15,000 odd crores to more than 42,000 odd crores. Apart from that, this will also mark as a beginning of the bank's next growth chapter, which will be stronger, more diversified and future ready. Now, what's the next date you should be watching out for? It's 12th November. EGM is going to happen, where they will seek shareholders' approval from RBL Bank. And let's also not forget that management has also highlighted that Emirates NBD currently has around 19 to 20% ROE. So that is also something that we should keep in mind given this deal. So definitely a very positive deal. And let's not forget, this is also a CNBC TV18 story confirmed that 60% stake will be acquired by Emirates NBD in RBL Bank.
Okay, Gaurav, thank you so much for that. And viewers, do not forget, we'll be getting you our conversation with the management of RBL Bank on the deal at 9 a.m. today. Stay tuned in for that. Okay, let's move on now and talk about Reliance Industries. They also reported their numbers. How was the performance in Q2 this time? Let's go across to Rima for that. Good morning, Rima.
Hi, good morning. So Reliance Industries' performance was better than expected. The consolidated EBITDA went up by nearly 18%, ahead of estimates, driven by a beat on the retail segment, while the oil to chemical and the telecom business Geo was in line with estimates. So here are the numbers. Consolidated revenue went to about 2.55 lakh. The EBITDA was nearly 56,000 crore. With an operating margin of 18% and a net profit of 18,165. As we said, the beat in the EBITDA was driven by retail. Reliance Retail's revenue growth was 18.6%, ahead of analyst estimates of 13 to 15%, and even the EBITDA growth for retail was at 16.3%, again, higher than estimates. The oil to chemical EBITDA was up 20% and GO2 in line with estimates at about 15%. Now, JP Morgan believes that the earnings momentum will continue, and this will be driven A, by better refining margins, which seem sustainable. 2, a weaker rupee will help the oil to chemicals earnings. 3, retail will continue to do well. There is seasonal strength, Christmas, etc. And telecom, for telecom, the big trigger is that ahead of the IPO, will we see a tariff increase? Valuations, according to JP Morgan, seem comfortable relative to peers. Market overweight rating, their target price is at 16.95. Kotak has an ad rating. They are sanguine. They're quite positive about the consumer side of the business, retail and telecom. The earnings growth will continue. But on the oil to chemicals business, they do see some headwinds, especially if India reduces their purchases of Russia and starts purchasing the more expensive crude in the market. But they still have an ad rating on the stock, target price 1600. Motilal Oswal too bullish, and their target price is 1700. Back to you.
Okay, Rima, thank you so much for that. Important brokerage notes and updates coming in there as well for Reliance Industries. Thanks so much. But let's move on and talk about some of the banking results that were reported over the weekend as well. We have HDFC Bank, ICICI Bank, which were among the two big and larger banks. Let's go across to Gaurav for those details. Gaurav, back to you.
Well, yes, when we look at HDFC Bank, we could say a better than expected result in terms of profit, and I'll tell you why. Net interest income that increased by 5%, it was in line with the street's expectation. In fact, net interest margins, they declined almost by 8 basis points. But if you look at pre-provisional operating profit, that increased almost by 13%. It was higher than the street's expectation, and this was because of the higher trading gains in this quarter. Apart from that, this same beat actually flew through the PAT as well. There we saw around 11% growth on a year-on-year basis. When we look at asset quality, we did not see any kind of concerns. In fact, the credit cost that came down almost by 6 to 7 basis points. And when we look at the management commentary, that also remained positive. When it comes to ICICI Bank, we saw same kind of beat. In fact, ICICI Bank, a big positive thing was the net interest margins. They declined just by 4 basis points. When we look at the numbers, net interest income increased by 7% on a year-on-year basis. PPOP increased by 3%. But apart from that, the provisions that came down higher than what the street is expecting. And as a result, when we look at profit, that increased by 5%. It was above the street's expectation. Apart from that, when we look at gross NPAs, net NPAs, we saw the fall there as well. And when it comes to loan book growth, that was at around 10.3%. It was a bit lower than their own trajectory, but it was again in line with the street's expectation. Next, let's talk about IndusInd Bank. When we look at the numbers were not that great. In fact, bank actually reported losses of around 437 crores. So when we look at net interest income, that declined almost by 17% on a year-on-year basis. PPOP declined almost by 43% on a year-on-year basis. Now, both these numbers were in line, but what came in as a surprise is provisions. Provisions were higher, and as a result, we saw profit, actually company reporting losses of around 437 crores. Now, this was not anticipated by any of the brokerages. When we look at net interest margins, that declined almost by 14 basis points. It was in line with the street's expectation. But specifically for the slippages, what they're saying is that they have accelerated write-offs as well as they have increased the provisions, and that is the reason why we saw this sharp spike in the provisions, and that is the reason why they also reported losses. Lastly, let's also talk about Federal Bank. When we look at the numbers, a very strong set of numbers here. Net interest income increased almost by 5%, PPOP increased almost by 5%, and as a result, when we look at PAT, that declined almost by 10%, but it was again higher than the street's expectation. What came in as a surprise is net interest margins that increased almost by 12 basis points. Remember, street was not penciling in any kind of increase in net interest margins. In fact, they thought net interest margins would compress. And at the same time, asset quality, when we look at credit costs, that came in at 0.5% versus their own guidance of 0.55. So definitely on all the parameters, bank actually reported better than expected numbers. And another thing which we should keep an eye out on is 24th October, where bank will hold their meeting to discuss fundraising via equity. So definitely this bank is going to be in a buzz today.
Okay, thank you so much for that, Gaurav. But on that note, we're going to slip into a very short break. After the break, we'll get you updates from Wall Street. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18, and let's talk about the US markets because Wall Street ended higher on Friday as bank credit worries and China trade tensions started easing down. Let's go across to CNBC's Julia Bostein, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were higher across the major indices Friday as bank credit concerns that sparked Thursday's regional bank sell-off cooled and tensions over a 100% additional tariff against China eased. The Dow climbing 238 points, the S&P 500 higher by 35, and the tech-heavy Nasdaq up 117 points. Apple and Formula One just announced a 5-year media rights deal that will bring all races to the Apple TV platform starting next year. The partnership will replace ESPN's current deal. Apple is paying about $140 million per year for the rights, according to people familiar with the matter. People familiar with the ESPN deal say the network had been paying $85 million a year on average. And Meta is adding more controls for parents over how much their kids are interacting with AI chatbots on Facebook and on Instagram. The tech giant said parents will be able to block private conversations with certain chatbots and get insight into the topics their children are discussing with the bots. Today's changes come after the Federal Trade Commission launched an investigation into tech companies, including Meta, over how AI chatbots could harm kids and teens. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But on that note, we're going to slip into a very short break. After the break, we'll get you what's happening in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV18. Now let's move on to some international update. After a long-drawn peace truce between Hamas and Israel, the Israel Defense Forces launched a new wave of strikes against Hamas militant targets in the southern Gaza Strip. The IDF's statement said that the strikes followed a ceasefire violation earlier in the day. An IDF spokesperson said that the attack struck dozens of Hamas facilities, including their weapons storage sites and military installations. U.S. President Donald Trump believes the leadership is not involved in these attacks and added that the situation will be handled properly. More international updates coming in. The Louvre Museum in the French capital has closed for a day after a group of intruders stole 8 pieces of priceless jewelry in a quick hit heist at the world's most visited museum. French government and museum officials said several intruders entered Apollo's gallery through a window shortly after the museum opened, relying on a lift used to hoist furniture into the buildings. Within just 4 minutes, the thieves stole away on motorcycles laden with 8 items dating back to the Napoleonic era. Now, a manhunt for these thieves was underway in Paris on Sunday as police cordoned off the museum, famously home for Leonardo da Vinci's painting Mona Lisa. Let's move on and get you what's happening in the world of commodities. And for that, we have Manisha Gupta joining in with us. Good morning, Manisha. It's Diwali cheer on D Street, but is that cheer continuing in gold, silver? What are we watching out in commodities?
Oh, well, yeah, thank you for that, Vinny. On Friday was a big profit taking, but Monday morning we're looking at some buying coming back. As you said, there is a ceasefire violation as we look at in the Middle East, and that seems to be letting some buying coming back in gold and silver. Well, on Friday, gold was down 2%. Silver at one point in time fell 6% as well, giving you a biggest intraday decline in 6 months. But having said that, silver still closed a ninth week on the higher side here. Silver has seen an all-time high of 54.5. The markets right now are looking at some profit taking with the kind of run-up that we have seen. Also, the risk appetite seems to be improving. Equities are doing well, so some money seems to be flowing back into that. The liquidity crunch in London silver market also seems to be easing. So there are some positives which are letting money out from the safe haven, which is silver and gold as well. What the markets will watch out for now is clearly going to be the US and China trade talks, where the cues will come in from that. But in the meanwhile, you also are looking at a very sharp decline continuing in case of crude oil prices. That one is down at a 6-month lows as markets look at higher supplies from OPEC members, cooling tensions in Middle East, and of course, this market as well will watch out for the US and China trade talks. That seems to be the one thing that the street will watch out for in this week in the international cues.
Absolutely, Manisha. Thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18, leaving the Nifty indicating a gap up start for the Indian markets. Thank you so much for tuning in. Up next, your Bazaar Morning Call.